Okay, what's up, everyone? Swinging Bull here with PB Alerts. Welcome to another one of my earnings stream. So good to see everybody. Streaming also over here in the Discord. Got a nice little group over here. My buddy Jared's over here. McNulty, good to see ya. J Bear Policy, Jamie, Yorkata. We're all just hanging out over here. Ninja, good to see you. Joke Slice. Seth on YouTube. Cava to the moon. Beat earnings last quarter, but stock still fell. Yeah, we're definitely going to find out. I'm going to zoom in a little bit. Probably just go 1 minute chart and we'll find out what time they're reporting. Just real quick, we might have a few minutes to burn here. So CoreWeave announces earnings at 4:05 p.m. Eastern, so about 5 minutes. Forecast EPS negative 0.20. Forecast revenue 1.08 billion. So $1 billion revenue company every quarter. They're trading just above their anchored VWAP here. You can see from this chart. The anchored VWAP's probably just above 130 on that one. So 4:05 p.m. Eastern for CoreWeave. Okay, let's go to Cava. See what's up with Cava. They are supposed to report at 4:10 p.m. Eastern. About another 9 minutes for them. Forecast EPS 0.13. Forecast revenue 286.56 million. Just wanted to look at one thing real quick for Cava. And I'm going to take Seth from YouTube. I'm going to take your lead here. I just want to see what they did on their previous earnings, what their price was 1 day after the previous earnings. Should be able to look up like the past four. Let's see. Okay. Yeah, they were down a little bit. Okay, so they last reported on May 15th. Yeah, they were down a couple percentage points the next day. Suppose we can go to the chart to May 15th and see what the actual reaction was. So that's May 15th. Let me just go daily chart here and see what they did on May. So it's March, April. Here's May. Zoom in a little bit. Yeah, right here. You see right here. Yeah. I mean, okay. So 1 day after, yeah, they were down just a little bit, but then they went on to downtrend. So that's probably what Seth on YouTube was referring to. They beat earnings, but ended up selling off nonetheless. And that's probably because they messed with their guidance or something, probably maybe decreased the guidance. Investors don't like that. Even if they beat EPS and revenue, it's just that guidance will just kill it there. But all right, so let's go back intraday, see what we got here. So oops, let me go back down. Getting too many pop-ups. I'm sorry. There we go. Okay, so in the time before that, they were basically flat the next day. 3 earnings ago, a little bit green the next day. 4 earnings ago, they had a solid move, almost 20%. So we'll see if they do something like that today, right? So we'll go back to the sticks. And I got Webull and Trading View pulled up. So we'll just take a look here and see when the volatility starts picking up. All right, got over 500 people tuning in. Welcome all my Twitter peeps, or I should say X, right? All right, CoreWeave, getting some movement on CoreWeave. Let me check a few other things on my other screen, and we'll get EPS revenue for both companies, any guidance I can find. I'll show everyone how to get to the earnings web call and what time the earnings web call is. And then at the end of the stream, I want to show everyone, I started a new account challenge in the Discord. So I just wanted to share the details of that with everyone. And it's going to be a lot of fun, live trading with everyone, and doing it through my Fidelity, one of my Fidelity accounts. I got funded specifically for the account challenge. So we'll go over that towards the end of the stream once we get the earnings out of the way with CoreWeave and the Cava Group. So we should get, who was that 405? 405 was supposed to be CoreWeave. So we should get them first, followed by Cava at 410. All right, so let's just see. I've got about 20 more seconds before we're supposed to get the CoreWeave data, and then followed by the move, right? So let's see what's going to happen here in the next few moments. There's some selling coming on the tape right now. Let's take a look. Time and sales. Yeah, mostly red and white. So getting some sell orders coming through. All right, let's see if this ends up being the real move or not. Sometimes that first move ain't it. It's officially 405, so now we should get the move. Let's see what it ends up doing. And while we're waiting for the price, Blue Brain, what's going on? Good to see you, man. Shout out to Blue Brain. Always coming to these streams and hanging out with me. All right, CRWV. CRWV. Let's see what we got. Just going to scroll down a little bit. Had some people on X buying calls before their earnings. A little bit risky to trade through the earnings, as we all should know by now. It's okay to do a fun lotto trade every now and then. There's nothing wrong with that. But, you know, usually when I trade something like that through earnings, like if I buy a call or I buy a put, I mean, obviously we're biased. There are some strategies out there where we could be kind of neutral as far as if we did like a long, I call it a long condor. There's a short iron condor and then a long iron condor. Sometimes we do long iron condors, which is basically a debit spread on each side of the price. A setup like that, you can actually make money regardless if it goes to the moon or it burns to the ground. You can make money in either direction. Where the risk is on those long iron condors is if the price stays flat. That's where the risk is. But of course, you know, we're expecting a move with the earnings catalyst. So, you know, you would think the chances of it staying flat is not as good as it actually making a move up or down. So I like those trades for the earnings. If I do go with like naked calls and I am biased, I am bullish or I'm bearish, then sure, I'll maybe, you know, with some fun money, I'll you know, buy an option and see how that goes. And, you know, of course, I like to try and when I do trade naked options, I do like my strike price to be close to at the money, you know, as close to the money as I can get. Better yet, in the money. The more in the money with your strike, the more you're going to be kind of simulating synthetic shares. You can easily tell that from the value of the delta. So like the you know, the high deltas, that's more like simulating shares compared to buying something out of the money. But look at CoreWeave. Seth, you must be liking this. Seth on YouTube. I think he was the first one in the stream when we started. Got about 2,000 people here in the stream, so it's nice to see everyone. We had a great week last week. Had like, you know, cumulative over 3 days. I think we had like 15,000 people hanging out with us, and we're just here, you know, talking about the stocks, looking at some levels on some bigger time frames. Looking at some levels, some shorter view levels, you know, intraday levels for the remainder of after hours price action and pre-market, you know, going into pre-market tomorrow and stuff like that. We look at the income statements, the balance sheets, just kind of get an idea of what the health is of the company. Kyle, no doubt, Kyle on YouTube. There you go. Yeah, you're absolutely right. It's got some buyers coming in now. Closed the regular session at $148.75 a share. It's trading above 150 right now. So let's see if the momentum can hold up here. These are 1 minute candles. You see the size of these wicks. Look at this. Look at this wick it just printed here, all the way up to 155 to the dot, to the penny. And then the sellers just hit the tape and you can see the selling pressure there. But nonetheless, the buyers were able to push it up. So it's kind of depending on how you look at it. You know, is it buying pressure? Is it selling pressure? Well, kind of depends how you look at it because, you know, yes, the buyers did display some momentum by being able to push it all the way up to 155. However, the sellers retaliated and within the 1 minute candle print was able to push it all the way back down. So it just kind of depends how you're thinking about it. Some people would probably more say that it's selling pressure. Okay, so that there's like sellers up there waiting, hits the tape and pushes it back down. So that's probably some, you know, we would call it a supply zone, right? So initial negative reaction, then that was that was right on 405 at the dot. Then the bull stepped in and pushed it up, and then the sellers pushed back down. So it's just a back and forth tug of war going on right now. We'll see how this is going to shake out of the bag. Let me look at level 2. Right now, there is a sell side imbalance on level 2. So let's see what's going to happen. These things can change on a dime, especially for these earnings. Let me look at a few other things. Give me 1 second. And I wanted to see, look at Cava. Cava's selling off. So we were talking about CoreWeave, but now let's go to Cava just for a second. Cava's selling off. It's down 13 bucks a share, down about 15% in after hours. So obviously investors are not liking the Cava results. I do have results for CoreWeave. Let's talk about CoreWeave real quick, and then I'm gonna jump over to Cava. And Seth from YouTube, that was I misspoke there. You were talking about Cava, I was talking about CoreWeave, so that's my bad. Let me just pull this graphic over for CoreWeave, and we'll just do a little recap on them real quick. Let me minimize that and pull this over. I'll keep CoreWeave on the left. So forecast, yeah, Seth, I feel you, man. And Seth on YouTube, there looks like we got 2 Seths on YouTube here. So hello to both of you. And I know Cava selling off. I know the bulls aren't liking that right now. We can talk about a few things that, you know, moving forward, that maybe you can implement to help protect some of this downside. I'll go over some examples. I know it's not going to help you now, but that's why I do these streams, because depending on what the reaction is, maybe I can give you some tips and tricks on to better hedge your downside. And, you know, who knows? Maybe there's something I say you didn't know, or maybe something I say that reconfirms what you were already thinking and you didn't pull the trigger on. So Seth Carolina on YouTube, I know you're not liking this price action, but hey, the least I can do, maybe there's some things we can go over on how I would have basically capped my downside through intrinsic value using like multi-leg options. I'll talk about that here in a minute. But let me just go back to CoreWeave real quick, because I got their data here, and then we'll jump back over to Cava, because Cava's obviously taken most of the action is on there. Unfortunately for the bulls, it's on the selling side, but as we got a bigger move on Cava than we do CoreWeave. CoreWeave is down 2%. It's not down a lot. It's just trading around 145 bucks a share. Again, closed the regular session at 148.75, so down a little bit. The forecast for the EPS for CoreWeave, negative 0.49. They just reported negative 0.60, so they did miss that by 22%. Revenue, which, you know, this is going to be important for CoreWeave. This is software and IT services, okay? So they deal with cloud platforms and cloud services and deliver like automation and efficiency and stuff like that. And they manage a complex artificial intelligence infrastructure. I like CoreWeave as a company. You know, it could sell off here, but just in general, we'll go over that a little bit. But revenue forecast was 1.08 billion, and they reported 1.21 billion, so 12% beat on revenue. Year over year numbers look great for EPS and revenue. Quarter over quarter numbers look great for EPS and revenue. I'm just wondering if it's guidance related. That's usually what the deal is when the year over year numbers are great. Quarter over quarter numbers are great. They beat revenue. CoreWeave did miss EPS. But then the stock sells off. It's usually guidance related. So let me just go back here. And then we're going to talk about Cava. And then I want to talk about how we could have maybe hedged ourselves if you were long on Cava going into this earnings. Just a few things, a few tips that maybe you could have implemented to where, especially if you had a profitable position going into the earnings, there's some very interesting things that we can implement to basically preserve any profit that you currently have on the table. And what I mean by that is implementing a collar trade. We can slap a collar on it, and I'll show everyone how to do a collar here in a second. But let me just make sure I didn't miss anything. So CoreWeave earnings, revenue backlog was 30.1 billion as of June 30th. Okay. Successfully raised 2 billion in 9.25% senior unsecured notes, not due till 2030. Upsized by 500 million due to strong demand to drive the next generation of cloud computing for the future of AI. Couple notes from the CEO and the chairman of the board and the co-founder. He's got like 3 titles, but His name's Michael Intrator. He says, our strong second quarter performance demonstrates continued momentum across every dimension of our business, said Michael. We are scaling rapidly as we look to meet the unprecedented demand for AI. Our purpose-built AI cloud platform continues to set new benchmarks for performance and scalability, including becoming the first company to offer the complete Blackwell GPU portfolio at scale, making CoreWeave the platform of choice for the world's most advanced AI workloads and AI pioneers. All right, so got some juicy commentary from the CEO. Not really helping the stock price any, but it's not really, getting hammered either. I mean, it's down $10 a share. There's $150 stock going into the earnings. Let's see if it tries to form a bottom, and maybe we can draw some levels out on here and look at some possible retrace levels to the upside. But so far, the bottom is not in. Okay, so we want to be a little bit patient. Trying to average down when the bottom's not in yet. That could be risky. That could be dangerous. Not financial advice, but come on, if I've been trading for a while now, but there's enough information and education out there. Of course, we teach all this in the Discord, but we gotta wait for the selling to slow down and to better yet to stop, and then try and pinpoint on the chart some higher lows, start printing. Maybe we're on to something there, that the bottom's coming in or the bottom is in. But until some of that stuff starts happening, don't be jumping in head first here. I don't like to see anyone get hurt. And if there's anything I can say to help anyone, then I feel good about it, right? CoreWeave, all right, investors aren't really liking what's going on. The guidance for CoreWeave, let me just refresh for a second here. We're going to jump over to Cava in a second because I do want to talk about how we could have hedged the downside on Cava since it's taken more of a hit than CoreWeave. But let me, Shai Balor on X. If you haven't followed him yet, go follow him. The guy's a machine. He is an investor, okay? Fundamental investor. I had a chance to meet him in person in Delray Beach, and we hung out for almost a week, and got a chance to go to dinner together and everything. My buddy Shai, if you're watching or listening, shout out to you, brother. Hope to see you again soon. But little breakdown from Shai. I'm just going to go with his breakdown because it's nice and solid and very well typed out here. So I'm going to post the sales and EPS first. I'll put that on the bottom of my screen. There we go. And just waiting for that to populate. Boom. All right. So info's on the bottom. That's just sales and EPS data. I did want to point out for OpenAI. Okay, so $4 billion OpenAI expansion brings total deal to $16 billion. And yes, they're first to deploy the GB200 and the NVL72 at scale with B200 instances now available. So, I don't think CoreWeave's in a bad position here. I know it's down $10 a share right now, about 7 to 8%. But hey, I don't think it's overall bad data going into the earnings. They had a free float of 49 million. Let's look at the income statement real quick. Okay, so they're still trying to pull a profit, positive net income as a company, but that's okay. This looks like it's a rather new company. Let's go to daily chart. Yeah, this just IPO'd this year. This has only been trading for about 4 months now, 4.5 months, I'd say. Kind of volatile price action after the IPO'd. Looks like in the high 30s, around there, maybe $40 a share. Rallied to 187. It was downtrending. This is the daily chart, by the way. It was downtrending up until about 4 days before this earnings announcement. It kind of rallied into the earnings a little bit. If you include today's price, that's 4 green days in a row. Obviously, it's red right now, but it's trading around 138. which it hasn't even retraced today's daily candle yet. So that's what I'm saying. That's what I'm saying. It's not a horrible sell-off. It's still trading in the body of today's daily candle. So, you know, at least it hasn't broke the day's low, which would be below 130 basically. Let me go 15-minute here. Yeah, I hit 130 and some change right after market open. So still trading above there. So yeah, it's pulling back. It's kind of just retracing the pre-earnings rally, to be honest with you. So it's not all doom and gloom with CoreWeave, right? So keep your eye on it. Wait for the higher lows to start printing. That will help give us more confidence that, okay, the bottom's in. We're on to something here. We'll see if the bottom ends up being this 135, 135.10. Let me draw a fib on this real quick. It's already 420. And I want to just kind of want to look at this like right when the selling started. Maybe here to here. Okay, so yeah, it's kind of dealing with the 25% retrace right now. This is kind of an important level to help us ensure that this isn't going to turn into some dead cat bounce and make a new after hours low. So that's going to be, I mean, I might be off by a few cents here and there, but I would probably put that at 139 a share for the bulls. And to ensure that this isn't a dead cat bounce, I'd like to see 139 get taken out. That's going to be my resistance 1, which I'll call R1. I'll put that at 139. R2, it'd probably just put that at 50% retrace, because if it can retrace more than 50%, then now my confidence is really going up that, hey, you know, this was considered a discount. There's some dip buyers in the picture. It's already retraced 50% back up. Now we're on to something. Then, of course, if it breaks the golden fib at 145, that's usually a green check mark that, okay, the reversals, we're in a reversal right now. So R1, 139, R2, 143, and R3, which would be the best case scenario, is 145 a share. That's what I'm looking at. So I'm only on the 1 minute chart, so I'm just kind of looking for higher lows and for some of these levels to break. And then it might not be all bad for the CoreWeave bulls, okay? So just hang on to your seats and let's see what the remainder of after hours brings, okay? All right, let me take this down real quick. Let's go to Cava. All right, let's talk about Cava, because they're kind of getting hit a little bit right now. They're down 21%, $18 a share. They closed the regular session at $84.68 per share. They were up almost 3% on the day, so, you know, don't forget that. But obviously that's kind of a drop in the bucket compared to the selling that's going on right now. So that's not even really impacting. It wouldn't even, you know, have anything to do with what's going on now. So sometimes, you know, kind of like CoreWeave, you know, what I was talking about, how it had a nice rally throughout intraday. And yes, it's selling off for the earnings reaction. But if you compare the selling that's going on in after hours with CoreWeave and compare that to the entire intraday price action, you should feel a little bit better that, okay, it's not really pulling back too much, because it hasn't even fully retraced the rally that happened today. So that's a good thing for the bulls, okay? Unlike Cava, that the floor just totally fell out from underneath them on this one. So let me go look at the data and see what's going on here. Let me make sure there's nothing in Discord I missed. Onrod, okay, it says, congratulations, Bull, you're killing it in the after hour streams. I appreciate it, my brother. Onrod's one of our lifetime members in the Discord, has access to all the bells and whistles, and he's here for life. And we love having him in the group, and just an awesome person. And it's been fun trading with him, and basically just you know, we just brainstorm off each other as we do with all the other Discord members. We're a team, you know. We want the whole team to make money, all right? We're here to make money. Let's treat it like a business, as we should. All right? Yeah, we have fun every now and then, but when it comes down to it, we're here to make money. All right? There's no other ifs, ands, buts about it. Look at CoreWeave trying to fish hook and curl up a little bit. So the 139 level, that R1 got breached. So that's a good sign. The next level for me is going to be the 143. So keep your eye on it and see if it continues in that direction. Back to Cava. I want to get this data on Cava real quick. Let's see here. I'm gonna go back. All right, because it's 425. The Cava's data is out. All right, let's go over this nice little graphic that the earnings correspondent was so generous enough to put together for everybody. We'll put it on the left here. Expected numbers, earnings per share, EPS. The forecast was 0.13. They just reported 0.16. So they did have a nice beat on EPS. How much weight does EPS have? It depends. It depends what stock it is and what industry they're in. Sometimes EPS means more. Sometimes revenue means more. It depends on the company, really. So they did beat EPS. Obviously, investors don't give two hoots about that because it's selling off, right? So revenue, expected numbers, the forecast was 285 million. They just reported 280 million. So yes, they missed revenue. Solid beat EPS, but missed revenue. So that kind of just tells you, oh yeah, okay, they beat EPS by 23%. Woohoo! It's obviously not, that doesn't hold a lot of weight compared to the revenue line item. And you can just see in the price action here, this is a 15-minute candle. Look at this big 15-minute candle right here. Wow. Let me go zoom in a little bit more just to kind of, is it trying to form a bottom or what? Just tapped 65. There are a couple green printed candles here, but they're really tiny, doji looking. There was a green one printed about 3 prints ago, doji looking, so it doesn't really mean much. I mean, I guess it means something that, hey, at least the buyers are putting up a fight. Sellers could be running out of gas. But take it with a grain of salt. These are 1-minute candles, and it is making a new after hours low as I'm speaking. So same thing with here. Like, I'm not even going to draw levels on this until it starts to curl up a little bit. But that's what CoreWeave started to do, right? It hit a low, 135.10. We finally start getting some green, okay sized prints, and then it's obviously starting to curl up. So that's an ideal time. Go ahead, draw your fib on and get some mathematical levels plotted out for you automatically. Save some time. Look, there are some buyers on CoreWeave coming in. So maybe this 135 is the bottom. That could have been the discount area there. Back to Cava. Again, not really too interested in drawing a fib on this yet. I suppose there's a little bit of divergence on the MACD. And you do got this orange MACD line crossing the blue signal line to the upside. That kind of is a bullish signal, but MACD is sitting here way super negative at negative 4.3. So that obviously is bearish, but the crossover, there could be a little bit of divergence there. Not really seeing, I mean, I guess there's a tiny bit of divergence on RSI. RSI is kind of coming up a little bit while the price is making new lows. So it's just a tiny bit of divergence, but not a lot. Okay, it's not the divergence where I would see and be like, okay, this is a strong divergence signal, and maybe you could try and front run the reversal. The signals just aren't strong enough for me to think it would be a good idea to front run this reversal. Okay, so kind of my opinion, not financial advice, but like how I would look at it is try and keep it simple. Wait for it to hook up a little bit, then you can go ahead and draw out your fib levels, and then we got some solid levels, and these levels line up pretty good most of the time. I mean, look at this 38% level on CoreWeave, lined up to the T. So that level's being contended with right now. Okay, these are just easy way to save time and draw some quick levels. And you math people out there know exactly what I'm talking about. These fibs really do line up beautifully sometimes, and just kind of makes things a little easier, I suppose. So Cava, still trying to find out if this bottom's in or not. It's coming off of a 1-minute candle print. It's a tiny one. Trying to work on a second one. If it starts curling up and the price gets back above this blue EMA, I'll probably draw a fib on it, and then we'll have our eyes on that 25% retrace to see if it can reclaim that level. So with Cava, let me go back here just real second. I apologize. So kind of, the earnings don't look fantastic. They don't look good, right? Obviously, they're not, because the stock is down 22% in after hours. So, but just to kind of recap the data, EPS was down 6% year over year. Revenue was up 20% year over year. It's something to keep your eye on. EPS down 27% quarter over quarter. Revenue down 15% quarter over quarter. So let me back up here a few screens, and I want to look for something real quick. It's 4:30 now. I want to make sure I saved some time to go over what I wanted to share with everyone. This new account challenge I started in the Discord yesterday. It's going to be fun and exciting. I just want to go over the details of that and let everyone know the kind of the action going on in the Discord. But Cava, all right, let me post these earnings. I'll get the EPS and revenue posted first. I know most people are probably here for Cava. I'm gonna find out what time their earnings web call is and how to get there. Seth Carolina, can you post a link to that in the chat, please? If you're talking about the Discord link, maybe to join our group, you should see it in the description of the stream here. I'll grab that for you too, though. So I'll grab that link and post it for you. That's no problem. So Cava earnings. Let's just talk about Cava earnings real quick, okay? Their sales. Oh, the Cava earnings thing. Okay, yeah, absolutely. I'll post how to get to the earnings web call. I'll post the direct link. It's probably going to start around 5 p.m. Usually when they report around 4, they do the earnings call an hour later around 5. So I'll get that direct link for you, Seth. No problem at all. I'll post that for you here. So Cava Q2 earnings, sales came in at 280 million. The estimate was 285 million. So they did miss the revenue. Okay, that's not good for them. Investors obviously wouldn't want the revenue to be beaten. I do think for most stocks, the revenue probably holds more weight than EPS. So anytime they miss revenue, that's probably a little worse than missing the EPS. But they missed sales revenue. Okay. Again, the forecast was 285 million. They reported 280 million. They didn't miss it by a lot. All right, let's be real, but nonetheless, they missed it. EPS, they beat EPS. Came in at 0.16. The estimate on that was 0.13. Just a little bit of guidance. All right, this is what did it for Cava, and this should make sense for everyone that's here for Cava. The reason why they sold off, they reduced their guidance, right? And specifically the remainder of fiscal year 2025, so the remainder of this year, same store sales, the estimate for the guidance on that was 7%. They adjusted it downwards to 5%. That's same store sales. That's a big line item for them. So that's all it's going to take. Did they beat EPS? Yes. Did they miss sales revenue? Yeah. So kind of mixed on those two fronts. But couple that with them decreasing their same store sales guidance, they decreased it. That's just a kick in the butt for the investors that are long on this. That's not what they want to see. They want to see growth. And reducing the remainder of the year guidance is not giving us confidence that there's going to be the growth that we want to see. So that kind of sums up Cava. It's looking like it's wanting the bottom. I'm not, it's kind of looking like it wants to. There are some green candles being printed. So it's something. It bottom, so far it hit a low at 64.61. If this curls up just a little bit more and gets close to my 21 EMA, I'm gonna put the Fibonacci on here, and then we'll see where that 25% is at, and that 25% retrace is going to be very, very important for me to feel good that this has a chance on retracing and reclaiming some of these levels back up. RSI starting to curl up again. See if this RSI can get back above 30. That would be a nice start to a possible reversal. MACD still printing that bullish signal, even though it's the actual MACD reading is still way in the negative down here at -3, around -3. But nonetheless, there is a bullish crossover MACD signal going on right now. So it's just something to take note. And the histogram candles turn green. So that's good. That, hey, it's making an attempt. All right. And you could even probably consider this RSI a little bit of bullish divergence for sure. If that RSI went it's kind of making higher lows on the RSI, and the price is kind of just trading sideways a little bit now. But trading sideways a little bit right now, I think, is a good thing if we're trying to anticipate a bottom. I try not to anticipate things too much, but we're getting a little bit of indications that, hey, this may be, the mid 60s. I'd call it the mid 60s. Is this mid 60s? Is this going to be the demand area? You still got some bigger time frames. Okay, so obviously we're not seeing the after hours price action on these bigger time frames. So just keep in mind the price is trading right around here, right around 65 bucks a share. All right. So let me go to weekly chart and zoom out a little bit. Okay, 65. Yeah. All right. I mean, as far as weekly candle prints go, I'm seeing support is probably right around 60 bucks. It did come a little lower. It tapped 58 and some change. It did. The buyers did push it up and create a bottom wick on that weekly candle, though. So overall, that was a nice solid week. So I'm thinking around 60 bucks. Try not to obsess over getting these levels like to the penny, because it's never going to be to the penny. That's just how it is. So I like to kind of like a roundabout level where I would feel safe taking a little nibble on it or something. If it keeps pulling back, I'd be looking at around 60 bucks a share. If it starts bottoming out, then hey, maybe the bottom was the mid 60s and we were off by 5 points, but that's okay. I'd rather be off lower before entry than be early, if that makes sense, right? So this is the 5-minute chart. No 5-minute greens printed yet, so just keep that in mind. We've been looking at the 1 minute. It does look like it's trying to trade sideways. RSI is diverging. MACD already has the bullish crossover, so maybe mid 60s. I'm just going to say S1, support 1 for the remainder of after hours and going into pre-market. S1 is basically right below where it's trading at now, 65 bucks. I'm gonna call it. You can, if you want to be safer, maybe S1 is 64 bucks. Support level 2, it's going to be that level on the weekly bigger time frame we were just looking at, right around 60 bucks. That was demand on that weekly candle, and it turned into a super bullish week when the price came down to there. The demand popped in, investors started piling into the trade, and closed a solid weekly green candle when we spotted that $60 level on the weekly chart. All right, so that's going to be my S2. S1 is a little bit tighter. It's mid 60s. Just keep it simple. 64, 65 bucks around there. That's my S1, all right? And it's looking like it's wanting to curl. We got a little bit of indication that it's trying to bottom. So I'm going to draw my fib on this down at 64, 61. And it's got a bit to go to crack that 25, though. 25% retrace. Let me just see where I drew the top of this at. 25% retrace. It's probably 69.50. That's probably what I would call it. It might be off by a little bit depending on where you put the top of the fib at, but I'd say 69.50 to maybe 69.75, like a little 25-cent range there. We got for the Cava bulls, we got to get that level has to be taken out before I'm even considering dip buying this. I'm not even going to consider dip buying this until some of these levels get reclaimed. And that's the thing. I'm willing to sacrifice a little bit of the reversal to give me more of a probability that I was right about the bottom, right? Just trying to get an edge here. The more of a little bit of an edge we can get, the better. And full disclosure, I do not have an open position in either one of these stocks, just FYI. So I'm just giving you my third-party opinion. I'm not biased. which is, I think, a good thing if I'm just explaining this to everyone, you know. But let's just take a look at Cava. Going into the earnings, they had a trailing 12-month PE of 70.48. Looks a little bit to be on the high side. However, maybe the hotel and entertainment services industry, maybe they typically have high PE ratios. I can check that later and verify that, but is just kind of compare it with their competitors and see where they fall in the PE range of that industry. Free float 109 million. Mr. Gamebread, I tell you what, if Cava pulls back to 60, I'd be taking a nibble there. Yes, that was Mr. Gamebread on YouTube. That's I would definitely, not financial advice. That would be comfort zone for me. It looked like a solid level on the weekly time frame. So those levels on the bigger time frames, I put a lot more weight to those levels than some level I find intraday. Right, $60 I think is a great deal on Cava. If it even gets down there, it's looking like it's trying to bottom. Look, it's kind of entered like a consolidation phase. Maybe it's an accumulation phase before it really starts to retrace up. And if that happens, then this obviously was taken as a nice discount on the stock for longer term investors, and probably going to be added to their position if this bottoms out. So, but absolutely, again, I have to say it again, not financial advice. For me, Cava at $60 is a deal. I would definitely be interested in participating, going long on that. Now, let's just talk real quick what we can do. I know everything looks good in hindsight, and what I'm about to tell you isn't going to help you, from what happened on this earnings. But moving forward, okay, this is what it's all about. We're trying to learn something that maybe we can implement if we find ourselves in, holding a position going into an earnings catalyst. Ways to hedge the downside. I get this question a lot, right? I'm just going to go right off the top, and just the easiest way to hedge the downside is a collar trade, okay? And if you already had profit on your position going into the earnings, the collar trade is going to be the ticket, all right? And one of the good features of a collar trade is a way to preserve profit that's already on the table. I think that's the best downside hedge to use if the position already has profit on the table going into the, before the earnings announcement. And what you would do is, if you had some profit on the table for Cava, it's very simple to do this. For every 100 shares, you could set up a particular lot size collar trade. Okay, let's say you had 100 shares. All right, let's just say you have 100 shares. The way to hedge the downside, and you could have actually used August. You could just use Friday's expiration. You don't have to put a lot of time on these, because the purpose of the trade is to protect yourself from the earnings catalyst in case there's a downside move. So what you could have done is, obviously, if your shares are in profit, your cost basis is obviously lower than what it's trading at if the position has profit on the table, right? So what you could have done is you could have sold this $85 call for Friday and collected $525 in credit. You would have got paid that on the onset of the trade. And then you could have used that credit that you collected to purchase an $84 strike put option. And actually going in to the closing bell, you would have had a little bit of money left over if you would have got $525 for that 85 call. And it looks like this $84 put to hedge the downside only cost, the mid price is about $500. You actually would have made $25 on the spread from the credit you collected on the call, compared to how much you spent on the $84 downside hedge strike put. And if you did that, what you just did is you put a collar on the trade. That means no matter how much Cava sells off, Cava could sell off to zero, and you would not participate in any of the downside below $84. That's what a collar trade is. For you investors and traders out there that have been trading for a long time, you know exactly what I'm talking about. This is an ideal strategy to implement if you're concerned about losing profits on a position because you're concerned they might have a negative reaction to their earnings data. Slap a collar on it right before the end of the regular session, you know, if they're reporting after hours. Of course, if they report in the morning, then you'd have to do it the day before. Protect your gains, people. Okay, there are ways we can protect our gains. And the collar trade is a great example. That's exactly what I would have done to protect my downside, and it would have capped my downside at $84 through intrinsic value alone. And the money that we spent on that $84 strike put, it wasn't even our money we used. We used the credit from the covered call to pay for it. We didn't have to use any extra money for that hedge. So that collar trade, you basically just gave yourself a free hedge. That's the beauty of a collar trade. So that's one way I would have hedged. A second way you could have hedged, which doesn't cover the entire downside, but it's a way to still get a triple-digit return on the downside if it does make a down move. And that would have been a put debit spread. All right, very easy trade. If you're not familiar with spreads, maybe you're not, it might be a little complicated. But I teach that in the Discord. I trade a lot of spreads. I write a lot of contracts, but a put debit spread, it would have been an easy way. And the easy way to set that up is you could have just done it right at the money. And what you would have done is you could have bought to open this $85 put. Okay, it looks like the mid price is about $5.45. So that would have been a debit, $5.45. But then you could have sold to open the 84 strike and collected a $500 credit. So $5.45 minus the $500 credit. And this would be a 2-leg trade, all done on the same trade ticket. Okay, I don't really leg into these spreads. I'll do it all at one shot. But this means for a $1 wide spread, it's only going to cost you $45. That $1 wide spread, if Cava falls below $84, you're going to be at max profit on that spread. If the $1 wide spread is worth $100, that's 100 minus $45 for what you paid for it. That means your max profit is $55, but you also get your $45 back. And someone mentioned that to me the other day. They were like, that risk reward don't seem right. If I'm paying $45 and my max profit is $55, they thought they were only getting back $55 if they won the trade. That's not how it works. You get the $55, but you also get your $45 back. All right, that's how that works with the spreads. And if you're making $55 profit on the spread plus your $45 initial investment back, you've just made 122% return on your money. Okay, and I'll usually do a handful of them so I can get more of a downside protection. It's not going to cap your entire downside, but it will at least allow you to make money if there's a down move on the stock. Okay. Pardon my mom who just walked into my office to use my printer.
Can you guys see me?
Yeah, you're right there.
Oh, hi guys.
She's waving hello. She came by to help me with one of my other businesses that we all own. So yeah, so you just met my mom, Arlene.
Sorry, Ben, I didn't know you were on live.
There's 3,000 people watching right now, so
okay.
now you're famous. All right, Kyle on YouTube. Then it goes up 21% if you do that. Yeah, I mean, but see, you have to be okay with the purpose of the trade. Yes, if you put a collar on the trade, you're not. There's no upside. I mean, there could, there is a little bit of upside because if you sell the $85 call, then the difference between that strike to your cost basis, there is a little upside there. Yes, Kyle on YouTube, great comment. I'm glad you said that, but you have to understand the purpose of the trade is not to make money; it's to protect your gains. So you have to understand that before you open the collar. That yes, it's going to cap my, it's going to cap my upside, but you're going to ensure you're not going to take a loss. And I think that's a little bit more important, right? So that's you just have to be under the understanding that's the purpose of the trade. Is I know if there's a positive reaction, I won't make it, my upside is capped by a lot. But if you truly are concerned about the downside and these earnings catalysts and the direction it decides to go, it really is a gamble. You're basically gambling if you're going into these earnings with an open position. You're gambling. You're gambling. I'm not going to sugarcoat it. To prevent it from being a gamble, I'm willing to put a collar on to ensure I'm not losing anything. Below $84, I won't lose a dime. That's the purpose of the collar, and that's the understanding you have to have going into the trade. You can't look back and beat yourself up and say, oh, it went up 21% and I lost all this money. You're sabotaging your mindset, bro. I mean, I'm just being straight up with you. I'm not going to blow smoke. I don't blow smoke. I say it how it is. You can't be it's okay to look over your shoulder, but never stare. There's no benefit for putting yourself in that mindset and being like, okay, well, I put a collar on and Cava goes up 20%, and then you're beating yourself up, literally putting yourself in a negative mindset. Oh, I missed out. Why are you putting yourself in that mindset? You should be happy that the collar worked, because if you didn't put the collar on, there'd be a negative reaction. So it goes both ways, right? You got to kind of meet yourself halfway on some of these things, because no one can predict the future. And what's more important, taking a gamble that there could be upside, or being a safe trader and responsible trader in ensuring no losses? Well, after trading for almost a decade, I prefer to prevent losses than taking a gamble that I'm going to make a bunch of money overnight. That's just my mindset. That's how my mindset has evolved over the years. And once you can start focusing on how can I not lose money, things are going to, I'm not saying anyone's having a tough time trading, but if you are having a tough time trading, try focusing on how to not lose money. And you'd be surprised how quick your portfolio turns around once you can start getting better at that. So that's just my advice, not financial advice. That's my opinion. And I know everyone thinks about this stuff. There's no one way to do it. Everyone's different. But Kyle, I do appreciate the engagement, because I wanted to explain that about the collar trade. And you made a great point that, yes, you can put a collar on and the stock goes to the moon and you miss out on upside, but you should be okay with the fact that you're going to prevent any losses and be happy with it. And depending on how much profit you do have on the table, once you implement, I got a way around this, Kyle, and that's why I like the engagement, because there's different, creative things we can do. So if depending on how much profit you had on the Cava trade, you could go ahead and put the collar in, but then just buy an extra call option, an extra naked call option, maybe out of the money a little bit, right? So make it a little affordable. Maybe do the $90 call. That's if you're worried about missing out on upside because you put the collar on. So there's ways around it. All right. There's creative ways to make sure that, yes, I'll put the collar on to cap my downside through intrinsic value, through the strike price of my put. But I also want to participate if there's any upside. You can just simply go out the money a little bit and buy a naked call, or you could do just buy some call debit spreads that do can get you a triple digit return. And then that way, if not only are you protecting your downside greatly, you can still participate in the upside. It'll just cost you a few more bucks. Okay. Andy Bello on YouTube, with the long-term outlook, Cava stock and calls will be a buy tomorrow. I mean, I tell you what, let me go back to here. So it looks like this fib I just drew on here is holding up. It is looking like it's trying to bottom out, y'all. And look at the divergence on the RSI. All right, we're finally getting some bullish divergence on the RSI. MACD is getting back to baseline, still with the bullish crossover. This looks like the mid 60s could be the bottom. Don't hunt me down if it's not, but it's looking like it could be. And yeah, this could be a good dip buy. We've seen that with a lot of other stocks, you know, where they sell off, you know, because of earnings. It basically turns into an overreaction sell off. It's the ultimate dip buy, and then you can get some calls. You know, my opinion, not financial advice, if you are going to try and dip buy with the call option, please put some time on it. All right, do yourself a favor and put a little bit of time on it, to give yourself a chance. Okay, because what if it takes a week or two for it to finally, like, you know, institution to buy back in or something, or whatever, you know, angel investor to up their position or buy the dip or something. We don't know how long that's going to take. So if you're going to try and dip buy it, put some time on it, maybe 3-4 weeks at a time, and maybe more if you can afford it. Another thing you could do to reduce your cost on, like if you go 3-4 months, or not 3-4 months, 3-4 weeks. So like this September 19th, you can see these calls. I know it'll be different strikes tomorrow, but nonetheless, the at the money calls, these are $600-700. Might be a little less. IV probably come down a little bit. Implied vol will come down a little bit because now the earnings is out of the way. So maybe they're going for $500-600 tomorrow or something. A way to reduce the cost of that is turn it into a call debit spread. You should still be able to get like a triple-digit return on these. And that way you can, it'll be a lot cheaper. Instead of needing like $500-600, you might only need $100 or $200 for a call debit spread. So that'll reduce the cost needed and still be able to participate in the call strikes that are at the money or even in the money. So just a little tip there for anyone who's considering dip buying Cava on the option side. Andy Bello, Cava earning call is at 5 p.m. All right, it's 4:56. So we only got 4 more minutes. Let me get everyone the link for the Cava call. It'll just take me 1 second. And I didn't get to go over the details of my account, account challenge I started in the Discord. I'm doing like a small account challenge just to prove that you don't need a lot of money to do the type of trading that I do. I guess I'll go over that in tomorrow's stream. But let me get the link for Cava earnings call. Andy on YouTube, thanks for giving me the heads up there. It probably starts around 5, which is in about 3 more minutes. All right, yep, I got it right here. So I got the direct link to this call. Let me just post that for everyone, because I know the majority of people are here for Cava and not CoreWeave. I mean, let's just be real. Let's see. Jimmy is on target. January 2027 call. Yeah, I mean, even a leap, you know, a leap call. Now you're really giving yourself plenty of time. You know, I know the leaps might be a little pricey, but you know, if you can afford it, leap is definitely going to be a good bet, because then you have plenty of time to manage the trade, and you could probably use that leap as collateral to actually write some contracts in the meantime while you're waiting for price to appreciate. And then the credit you receive by using that longer leap as collateral, what I mean by that is you use the longer leap as collateral to write weekly contracts on the call side. And the credit you collect every week can actually help, will actually reimburse you for the debit that you paid on the leap. And you can end, if you can get enough, basically you're writing calls. If you can get enough of those in, you can end up with just a free leap option. Now we're getting really super creative, right? So this trading business is not just cut and dry. There's so many different creative things we can do to help protect our positions, to participate in upside and while protecting the downside, to participate in the downside while protecting gains. I mean, there's all kinds of stuff we can do. Anyways, I keep blabbing my mouth. Let me get this. Sometimes if I get going, it's hard to stop. There is the link for the Cava earnings web call. It does start at 5 p.m. Eastern in just 1 more minute. I'm not going to be streaming the call, okay? I'm actually going to be signing off here. Spend about an hour. I do these earnings streams every Tuesday, Wednesday, Thursday at 4 p.m. Eastern. We go over a lot of fantastic info. Usually, if there's enough time at the end, I go over like some open positions that I have, and I share my Fidelity account live with everybody. Didn't quite have time to do that today. And I also didn't have time to go over this wheel, the small account wheel. It's based off of the wheel strategy. I funded a $2,500 account, and we're doing an account challenge in the Discord. A lot of the members are participating in the challenge with me, and I'm trying to prove to people the magic behind the wheel. And matter of fact, I'll just run through it real quick just so I can show everyone the details of the account challenge, because I just started it yesterday. So this is what the Discord looks like. Let me just scroll up a little bit, and here's my post about the challenge. Let me just zoom in. So I just want to give everyone an idea of what this account challenge consists of. So basically, it's a $2,500 wheel strategy challenge. Okay, I'm going to document my real-time journey of growing a small account using the wheel strategy. That's selling cash secured puts to get into stock and selling covered calls to get out of stock for overall profit. So just like my post says, selling cash secured puts and covered calls to generate consistent premium income. Okay. The starting account value is $2,500. I'm showing my Fidelity account to the members live. What's the goal of the account challenge? Grow the account steadily while sharing every step, every trade, and every lesson along the way. So it's going to be super fun to do this. What is the strategy? We sell cash secured puts on stocks we don't mind owning. If we keep doing that, collecting as much premium as we can until we're eventually assigned. Once we're assigned, we sell covered calls. Now we're on the covered call side. Okay, and then we just rinse and repeat that the whole time while managing risk. That is the strategy I'm using for this $2,500 account challenge. I'm going to do weekly updates. So the weekly updates will include a starting and ending balance, all the open and closed trades for the week, the premiums collected on a weekly basis and cumulative basis, any lessons learned, and what next week's plan is going to be. So it's going to be very detailed account challenge here. I'm going to be with everyone every step of the way. Why follow the challenge? Well, it's a good way to see a small account grow with a systematic, repeatable option strategy. Another reason to follow is if you don't know anything about the wheel, you're going to be able to learn the wheel in a transparent and practical way. And lastly, another reason to follow is you can ask questions. You can even share your own trades for feedback, and I'll give you feedback on all of those. What are the rules of the challenge? Start with $2,500. We stick to the wheel strategy only. We track every trade and decision, and we focus on risk management. And I just have a little graphic here of kind of what the wheel looks like when it rotates. All right, selling puts, collecting premium until we're assigned. Once we're assigned, we sell calls for more premium and income until the shares get called away, and then we just start back at the beginning. All right, so that's a little tidbit there. I'm not going to go too much more into it because I'm doing this account challenge for our Discord members. So if you want to, participate in the challenge or just follow along with the challenge, join the Discord. There's some links in the description. And absolutely, we do a lot of fun stuff in here. And I also have a lot of other trades I'm constantly doing. I'm mainly a contract writer, so I give updates on all my trades, whether they're red or green, full transparency. This is a profit I took earlier today on some, I traded the travel sector using JetBlue, selling some cash secured puts there, brought in $100 this morning. And then, yeah, so I'm not going to get into too much detail. If you want to know more, join the Discord. If you do end up joining the Discord, tag me in the chat. I'll come by and say hello to you. And we can chit chat for a little bit. Maybe there's something I can help you out with right away. But again, my name's The Swinging Bull with PB Alerts. I have a ton of fun doing these streams every week. Again, it's every Tuesday, Wednesday, Thursday. They're free streams. And we really dig deep on these streams and go over a lot of things. And I hope everyone appreciates the content that they're getting. And more importantly, if you're learning something, you know, that's great. You know, I want to spread the knowledge. I want to spread the knowledge. Just one last question here on a wealth wave on YouTube. Yeah, for unfortunate for the Cava Bulls, it is down a little over 21%. It looks like a bottom might be forming though in the mid 60s. That was my support level one. The ultimate value zone support level is $60. That was the weekly time frame. The weekly level, or the level we spotted on the weekly chart, is around $60. I would definitely be nibbling on this thing at $60. But if it can hold the mid 60s, I think that's a good deal on the stock as well. CoreWeave, just a little bit of an update on that. They did have a negative reaction. However, it looks like they're also trying to bottom out. About 135 a share looks like the bottom for CoreWeave. Just keep your eye on it for after hours. We want to see higher lows get printing. And matter of fact, the price it's doing right now, I'd be interested to see if this is right around 138, to see if that does turn into a higher low or not. That will be interesting if that happens. If it doesn't hold 138 here, there's a good chance it's probably going to come down and make a new after hours low. But we'll see. It did retrace back up 25%. Better yet, it even came back up to the 38% retrace, which is right around 141 a share. It was dealing with that level for a bit. A little bit of selling came in, popped back up. And now there's a little bit more selling come in. So support level one for CoreWeave, 135. It's obvious, you know, it's the after hours low. On a bigger time frame, the deal, if this thing is not done selling off, where I think the value is going to be at, let's say it's at 138 right now. And that's another thing. It hasn't even retraced today's daily candle yet. So the selling you're seeing on CoreWeave, it's not too bad. It could be a lot worse. You know, it could have, the bottom of today's candle could have already fell out from underneath it, and that hasn't happened yet. The bottom of today's candle is at 130 and some change. It's still 7 points above that. So it's not all doom and gloom for the CoreWeave bulls. So don't freak out. You know, if it was truly horrible earnings, this thing would be way down, kind of like Cava right now. But Cava is showing signs of life that the bottom's in the mid 60s. So CoreWeave on the bigger time frame, if this pulled back into the 120s, I would be interested in taking a nibble on this, because that's going to basically put it right where the EMAs are on the daily chart. I use the 9 and the 21 EMA if anyone was curious. I use the Bollinger Bands every now and then just to kind of get an idea if the stock's overextended or underextended, that kind of thing. I don't really use too many technicals. It's mainly candle prints and volume. I do use MACD and RSI, and I like looking for divergence on those. Other than that, there's not much else to it. And I'm just really good with my risk management, so that's why I do really, really well. Once you can figure out how to not lose money and really have good risk management, I said this at the beginning of the stream, you know, your trading is going to get a lot better. So stop focusing on how much money you can make overnight and start focusing on how can I not lose money. And things start getting a lot better for you once you get that down. But anyways, I hope that was helpful. But yeah, my support on, or my value zone on CoreWeave, since the negative reaction it's going through right now, has not even retraced the bottom of today's candle or yesterday's candle. You can see these wicks. That actually was some demand. S1 on CoreWeave, 130 bucks. Well, it's going to be, you know, zooming in a bit, S1 is going to be the after hours low, 135. Okay. S2 is going to be the bottom of today and yesterday's candle. Just keep it simple. So basically 135 S1 and S2, I'm going to put it at 130. 130. So 135 and 130. Those are my downside levels on CoreWeave that I would like to see hold for the bulls. And if you're not already in CoreWeave, I like it at 130. I would probably nibble on it at 130. Not financial advice, just my opinion on the matter. So Vinod on YouTube, I hope that helped a little bit. Whether you want to hold it, my opinion is if this was going to be super dramatic, I would think it would have been a bit more selling than what it's doing now. Let's see if it double bottoms here at 135. If not, we're just going to have to be a little bit more patient and see if the bottom eventually does come in, and then maybe it prints some higher lows before that to give us some indication that that's going to happen. But this thing, watch for double bottom right here. It could be a setup right now. If you're trying to scalp this in after hours, you could have a nice tight risk on this. See if you can get a double bottom bounce and make some money here. If not, keep a tight risk and you'd be okay. But yeah, anyways, yeah, it's after 5 o'clock. I've been streaming for over an hour now. I'm gonna go ahead and call it again. Swinging Bull with PB Alerts. If you're interested in joining the group, check the links in the description. If you join, I definitely look forward to meeting you. But other than that, I hope everyone enjoys the rest of their evening, and I'll see everyone in the very next stream. Cheers.